Hey, how's it going, everybody? Welcome back to the portfolio. So, I'm going to make a quick video on my projections for the portfolio, probably for the next 6 months to about a year. So, this is what I think the portfolio will be at in the next 6 months to a year with the shares that I have right now, the stocks I have, the companies that I hold. I'm going to go over the nitty gritty of all that stuff, all the things I think will happen with the portfolio for the next 6 months. So let's actually check out my stocks and ETFs real quick. As you can see here, I have $121,000 worth of stock, right? Obviously, not all that money is mine. Some of it is in margin. Um, I don't recommend you use margin if you don't know the risks of the margin, right? Obviously, if you guys have used margin, you guys know that it could be a very risky. But I'm not a financial advisor. You do your own due diligence, and this is just entertainment purposes, right? But obviously, my portfolio is about 80,000, so I have about $40,000 in margin. So a pretty significant amount, honestly. I would like to bring that down. I would like to use. I would only like to use the rest of the margin I have, which is $50,000 in margin, if I see an incredible drop in the market in which I have to buy stocks. Right, that would be the only use where I spend the rest of the $50,000 in margin. But with the amount of money that I have coming into the stock market, I usually am able to put in about $700 to $1,000 extra per week in the portfolio, which is pretty good. So I'm able to buy the stocks whenever I want, and if I see great deals, then I kind of go into the margin a little bit. But usually over time, the margin will be paid down if the market isn't dropping a lot. But let's go over some of the holdings I have. AMD, as you can see, AMD is my biggest holding by far. I have $67,000 in that holding. AMD, with next earnings, we have two earnings this year actually, for the rest of this year. But this next earning that's coming up, I believe this it will make this stock skyrocket. I think we will not see 500 very soon after earnings. So I project that AMD will be in the $600 range in August, and maybe make its way to $700 before next earning, and then next earning will be, I think, pretty much the same thing. I think most investors are not ready to see the type of numbers AMD are going to put up. I think it will be what Nvidia was doing back in 2021, 2022, 2023, those years where it just skyrocketed up in insane amounts. I think that's what's going to happen to AMD. I think AMD will probably exit the year $700 plus, if not $800. But that's just be me being super optimistic, and I'm just leaving it at that. So AMD $600 soon. SoFi is a pretty tough one, right? Because I do believe, if you guys watched my other video, SoFi will do very good in numbers, but since of what's going on with the war and oil prices staying up, it will basically make inflation go up, which means most likely the Fed will cut rates. And obviously, when not cut rates, raise the rates. And obviously, for stocks like SoFi, that's not very good. So I think SoFi may not move up a lot the next 6 months. If anything, I think it might stay stagnant or go down a little bit more. But I don't know, right? If it just depends on how long this war lasts, which seems to me that it's not going to last anytime soon. So the longer the war lasts, the higher gas prices stay up, the more chance we have for inflation to go up, which means the more chance the Fed will increase interest rates, and that will not be good for SoFi. But it will be good for people that want to invest in SoFi, because you know what? If we can get SoFi to get into the $15 range, $14, $13 range, I wouldn't mind buying a lot more SoFi stock if I see the earnings, the numbers do well, even with interest rates going up. I mean, that's a good opportunity to whenever they do decide to cut interest rates, we may see SoFi skyrocket up in insane amount. So I wouldn't mind that. Another 6 months to 12 months of me buying more shares. I mean, I already have a decent amount into this, but I wouldn't mind buying another $10,000 worth of stock in the next 6 months if I see under $15. So And then whenever they do, like I said, whenever they do cut interest rates, we may see SoFi skyrocket up. Probably if the stock stays at $15 for the next 6 months, I think we will easily pass 30 to $40 after that, depending on how good the numbers are. If we see $40 in the next 6 months, and I'm able to keep putting more money in, I mean, this stock will help us. Will push the stock up. But like I said, 6 months. For the next 6 months, I don't know. I don't really see that much upside with SoFi, so I'm just leaving it alone, holding. Celsius is one that I could see jump pretty quick. If earnings do very well, I can see Celsius jump pretty fast. I can see it $35, $40 in a month or two. Celsius is just that type of stock that you can see it make quick moves fast. You see over the history, you see this stock jump up. So, but for me, I just need to see the numbers. If the numbers are doing well, we see growth. That's fine. I mean, if I see $26 this week, I'll probably buy some. I would like to get this one up a little bit more. Obviously, I would like to get all these up. I didn't buy enough Elf. It went way too fast, man. This is a stock that I like. I'm up 36% on it. If somehow I see Elf going into the 60s, I'll maybe buy a little bit more, but I need to see some big red days. I like investing on big red days. I don't like really investing on green days. All I've been seeing Elf do is go up. So ServiceNow, we had its earnings. I think there was a good opportunity to buy in the 90s. Low 90s. I mean, do I see it going lower? I don't know. They did do very well, but just their expenses are going up a lot. So they just need to keep that in check. If they can keep that in check, lower the expenses, I think this stock will do very well. But I think this is going to be a stock also that will have trouble going up a lot unless they get that line in order. If they do, then that's good. But like I said, I like this one for the very long term, the next 3 to 5 years. So if we can see it stay under my average cost, I'll probably slowly add over time. Salesforce, same thing. We're going to have to see what Salesforce does. But if Salesforce continues to go down into the 150 range, I will probably buy some more. Basically, the same thing with ServiceNow. Netflix looks like this one could be another one where the growth may be slowing down, but they're going into another bit their ads business, right? So we want to see how well their ads business does. Obviously, their subscribers are slowing down, so that's another thing where investors are paying attention to this. If they keep seeing subscribers going down and their growth rates slow down, then I think a lot of growth investors will get out of this stock. So we need to pay attention to this one. I like this one for the value that it has, but I want to see their new their ad business do very well. If we see their ad business do very well, we can see Netflix start moving back up, maybe into $100 range. But this is another one that we have to see play out. So if it keeps going down, we may buy some more. So then the next one, Meta, and this goes in hand with Meta, Microsoft, and Amazon. So these three right here. These three, I think these ones probably are not going to go up anytime soon. This is going to be another case where for the next 6 to 12 months, just load the boat, because you know what? These guys are increasing their CapEx quarter after quarter after quarter, and investors don't like that, man. And obviously you can see, like, if Meta was not, I say, having such a high CapEx and they started cutting their CapEx, this stock would be $800 plus fast. Same thing with Microsoft, same thing with Amazon. I mean, Amazon's always been a company that's had a high CapEx, always investing. But like I said, I mean, we would see all these stocks up to all-time highs at least. So I think this is a very good opportunity for the next 6 months. If we see these stocks report earnings, they're gonna have high growth, right, in their cloud businesses. In I mean, they're gonna have high revenue in all their businesses, right? Especially with their capex, they're actually expected to have a lot more higher growth, right? So if we're not seeing those super extreme high growth for them to justify, they're gonna have, I don't know what they're gonna need to do to justify their spend, because if they can't grow as much as investors want them to grow, then they're gonna have to cut their capex, right? But they're not going to do that because right now it's basically an arms race with them spending. So we may see some more slow bleeding out with these stocks. We may see Meta going down into the low 500s in the next 6 months if they continue to increase their capex in the next couple quarters. I'm fine with it, because I would love to get Meta, Microsoft, Amazon like $5,000 to $10,000 position into it. Right now, I barely have a little bit under three. So if I can see Meta continue going to 580, 560, 550, I'm gonna probably continue to add. I would like to make Meta a very big position. Same thing with Amazon, Microsoft. Out of the three, I think I like Microsoft the least, but Meta and Amazon, I wouldn't mind having them top three position. If not, I may even want it, depending on how low it goes. I may even want it to go a top two position, right? So it just depends on that. Shopify, I love this company long term. I just buy the stock whenever it's red a lot. So if it can continue to go red, if we see, like I said, a recession, a bear market in the next 6 to 12 months, if we see under $100, I would like to load it. And whenever we see a bull market, this is stock's gonna skyrocket up. So you just buy the stock whenever it's very red out there and stock bounces back, very volatile. Robinhood, Robinhood. Look at this, Robinhood. I like this stock a lot. I like this business a lot. Obviously, I'm using Robinhood right now. They're a very innovative company. I like the way that they do things. Um, I was able to buy the stock in the 70s. It went all the way into the 60s, I believe. Wasn't able to buy as much as I wanted to, but this stock very volatile, man. If I see a lot of red in this stock, I'll buy it because I think this stock will continue to go up. And then last but not least, Palantir. I think Palantir right now is a very good deal. Obviously, last month when we saw it at almost at $100, it was like 107. If we could see those prices again, I would like to buy a lot more shares. So that's kind of why I'm paying attention to this. Palantir, I think Palantir long term will be a very big company. It's already a big company, but if we can see this one going down to $200 billion market cap, maybe 250, I think eventually this will be $1 trillion market cap in the long term. So, but most of these stocks, all these stocks here I'm holding for long term. That's kind of my projections right now. Most of these stocks right now are kind of like in dead water, at least for the 6 to 12 months. I'm fine with that. I think it gives me a better opportunity to have a bigger positions in them. So whenever they are ready to move up, I will have bigger positions in them. So for me, if they go up a lot right now, good. If they go down a lot, and I see the numbers still doing very well, I'm happy. But for right now, what I'm seeing, I'm not planning on selling anything, other than maybe AMD, maybe early next year. But that's probably the only stock that I'm seeing that I might want to sell. Most of these are newer positions, so I'm going to be holding on for at least a year or two. I'm not trying to sell for any short-term capital gains. I want to hold most of them for long term, at least 1 year plus. If not, most of the time I'm holding for 3 to 5 years. Obviously, I bought AMD last year, so if I was to sell it next year, it would be about a 2 year of me holding it. But I wasn't expecting it to move this much. I was expecting it to hit $300 last year, maybe $500 this year. But I'm thinking it might hit $600 or $700 this year, if not $800. If it does hit $800, then I'm gonna be very interested in maybe cutting my position next year. I'm not trying to cut it this year because I'm not trying to pay taxes next year on it, because it would be a pretty big tax bill if we see $800. Let's see another $300 a share. That's gonna be another four. It would be $90,000 plus in gains. And if I take taxes on that, let's say a third of it's gone, I have to pay a third of it in taxes. So I'm not trying to do that this year. I want to do that next year. So that's kind of like my short-term projections on this. I still believe we may hit 100K by the end of the year. We got pretty close already to 93,000. So we just need a little bit more green. I think all these will do very well. I don't think we'll see any big moves in this. Most of these stocks are pretty much lows right now, other than AMD, ELF, and Robinhood. Those are the three stocks right now that are doing very well. But the rest of them are pretty low. So if they drop any more, I don't think they will drop a lot more. Right? AMD would be probably the only one that would drop a lot. That would be a significant drop in the portfolio. And we have seen it drop a little bit already. We've seen it drop as low as 485. So I don't know if it can go lower than that. It probably could, but it just depends on how good the numbers are or how bad the numbers are, you know. But I think we're doing pretty well. I have enough buying power. This buying power will continue to increase every week. So if there is a bear market drop and I start seeing some stocks dropping to crazy numbers, we are in a good position to capitalize on that. So thanks for watching, guys. Like the video, subscribe.